fundamental building block is the substantial amount of operating cash flow that we are generating from our copper tailings reprocessing operation in Chile.
Well, hello to viewers tuning into Assay TV. I'm delighted to be catching up with Amerigo Resources again, a leading copper producer with assets in South America. And I'm catching up with Aurora Davidson, President and CEO of the company. Aurora, it's great to be speaking with you again.
Thank you for having us here. I'm glad to be back with an update on our company's developments in the last months.
Yeah, certainly. Well, look, you finished last year, since last we spoke, on an excellent trajectory. Can we just go over some of the highlights of how you concluded that year and the financings there? That would be great to start with, to begin with, your financial results for 2021.
Yes, absolutely. Well, I think that since we spoke, if I recall, it was back in October, we've had a number of milestone events at the company. We announced a normal course issuer bid to retire 10.75 million shares. We have record financial results, as you mentioned. We have also done an increase in our quarterly dividend payout. We have an annual top-up dividend to flow the excess cash on the balance sheet to the shareholders. And we've already reported strong Q1 production numbers. So all of these events essentially tie together, but the fundamental building block is a substantial amount of operating cash flow that we are generating from our copper tailings reprocessing operation in Chile. We have a stable operation with low execution risk, which works very synergistically with high copper prices. Right now, when we're doing this interview, the single most significant results, financial results that we have, as you mentioned, were the 2021 financial results. So I'm going to speak a little bit about those. And just as a reminder, all of the dollar figures that I use in this discussion are US dollars. So in 2021, we produced 63.4 million pounds of copper at an average copper price of $4.25 per pound. This resulted in net income of $39.8 million, earnings per share of 22 cents, and free cash flow to equity of $57 million. This is a very important metric that we're starting to use in telling our story, because essentially what it means, Adam, is that after meeting Amerigo's low capex requirements and taking care of our debt obligations, our company had $57 million potentially available for distribution to the equity holders, the shareholders of the company. In light of the strong results and the board of directors' view that returning capital to shareholders is a key corporate goal, the company has put in place, as you know, various share buyback programs and has a unique dividend policy in place. This started in 2021 and is continuing into 2022. For this year, we have set up challenging production and cost targets, which we are meeting. We announced our Q1 production results of 16.5 million pounds of copper at an average copper price of $4.64 per pound. And we met our guided cash cost of $1.90 per pound. So we have started the year again with solid operational footing under very auspicious copper price conditions.
It's fantastic news for shareholders indeed. And these are some great progress that you start the year with. Let's focus in on the top-up dividend a little bit. We should perhaps spend some time on focusing the metrics of that, how that works, and what led the company to initiate this kind of mechanism.
Yeah, that's a good continuation of a discussion. So dividends are a fundamental structural way of returning capital to shareholders. One of the key objectives that Amerigo has is that we want to achieve a dividend policy on the form of a sustainable quarterly dividend that shareholders can rely on. We do not want the quarterly sustainable dividend to go up and down from one quarter to the next. What we want is to have a floor that can be sustained and which only grows in the measure that it can continue to be sustainable. So that's an important building block. However, that may lead from time to time or from copper price to copper price to the company ending up with more cash on hand than is needed for working capital purposes to run the company. So the concept of the top-up dividend is essentially an additional dividend that can be declared and paid from time to time to distribute surplus cash flows to shareholders in a flexible way. The board of directors will make this determination, will ascertain, well, what is the amount of cash that we need to keep as working capital, 20 million, 25 million. It will depend from time to time, but we think that that is a reasonable figure to work with. And by having a sustainable, reliable quarterly dividend and the flexibility of a top-up dividend to distribute surplus cash, we now have in place a very attractive dividend policy. And I would like to even think that it's one of its kind in the universe of mid-sized copper producers.
Yeah, certainly very unique indeed. Let's focus just a little bit more about your excellent production so far this year. As you mentioned, you've exceeded your target guidance. Is that you've raced ahead and that it's going to change the guidance for the rest of the year? Are you simply on the trajectory and the path that you expected? Is this cost wave and inflation that's sort of hitting the rest of the junior mining companies in the industry something that you're factoring in now? Talk us through the dynamics.
Yeah, well, we basically met our guidance for Q1. We have an annual guidance. We're not providing quarterly guidance. And we are on track to meet that guidance, both in terms of copper production and cash cost. When you're talking about inflation, we anticipated high inflation this year, and we factored that into the metrics of our cash cost guidance. The known cost, the significant cost for us are, we know what they're going to be this year. They are power, steel, lime, TCRCs, smelting and refinery charges. Those are set. Those are not going to be changing significantly in the year. And the costs that are still subject to inflation are local costs in Chile, such as labor and maintenance. And those are being, there's a bit of a natural hedge with the exchange rate dynamics of the Chilean peso to the US dollar. So we are not seeing any significant variance right now as we go into the fourth month of the year between our guided cash cost and what we're seeing in reality. I think that's quite a significant piece of information in this times of high inflationary pressures.
Yeah, absolutely. Very good. Okay, let's focus on some of the more topical issues surrounding Chile and then where your assets are and where you're operating. Obviously, two prevalent themes are water, water rights, water consumption. It's a challenge for mining globally, but that is pertinent in Chile. And then also the political situation. We've had a change of ministerial leadership. Could you talk us through where Amerigo sits within these two key issues?
Sure, and those are, as I mentioned, two key issues. Water is significant. In the case of our particular operation at MBC, we're fortunate that our main source of water is essentially the water that is contained in the fresh tailings that we receive for processing at our plant. And this is a unique benefit of our operation. So in addition to this primary source of water, we have a series of water rights from adjacent natural water bodies, and we have a very efficient industrial water recirculation system at our plant, of which the core functionality comes in from industrial water thickeners. We have been working in the last 2 years to revamp our industrial water recovery system, and it's working quite well. And of course, we can capture and store rainfall as we have at an on-site water dam storage. And this is very important because this has allowed us to store water in periods of higher influx, of higher rain, to ensure that we have reserves on site to supply any system shortages through the dry season in Chile. We have what's called we call it our water matrix of sources and uses of water. And we currently have in storage about 4.5 million cubic meters of water, which is long enough of a reserve, along with the ongoing sources and uses of water, to maintain our processing targets for a period of at least 18 months. So we have this constant vision in front of us, kind of a rolling forecast of our water usage in order to identify promptly if we're following below that safety level, but that's not the case at the moment. You also talked about politics, and that's an interesting subject in Chile. On March 11th, Gabriel Boric was inaugurated as president of Chile. He's the youngest president that Chile has had. He's only 36 years old. And he was elected from a left-wing coalition, which initially created some question marks in respect of what would be the next steps that he would take in running Chile. However, after having won the elections last year, what we have seen is that this government, and even before taking power, has moved away from some of the more, I wouldn't call them radical, but from some of the more liberal policies that they had in place in order to move to the center ground of politics. And that's important because Chile is the most solid democracy and economy in Latin America and has been in recent decades. And the new government is taking the necessary steps to ensure that their ambitious goals, which include revamping public education, revamping the public healthcare system, strengthening the pension system in Chile, all of those objectives are going to require additional funding via taxes. And I think that the business sector in general sees that it is more probable than not that higher taxation rates may be enacted, but to the extent that these changes are done in a reasonable way, taking into consideration metrics, for example, of gross profit instead of just metrics of sales, as some proponents of changes to the mining royalty taxes were thinking of. All of those changes can be focused and can be implemented without creating significant noise if all the necessary steps are taken. So the government is acting in a measured and responsible and mature way. That is very, very good news. Now, at the same time, Chile is undergoing a process where a new constitution is being drafted. And this process is creating an additional layer of observation and potential uncertainty at the time. Now, the project of the new constitution is not set in stone. A new document has to be drafted, and then it has to be proposed to the country at large, and they will have to vote. It's a mandatory vote. It's not an optional vote, whether I want to go and cast it or not. Everybody's going to have the legal obligation of determining whether they want the new constitution or not. Now, the interesting part about it, from my point of view, is that Chileans are prudent people, conservative people, intelligent, rational people. So if the constitution that is being proposed aligns to these principles, it may be voted on. But if it is a wild card that contains items of high uncertainty, I think that it has a high probability of being rejected. So just to wrap up on the subject of politics, Chilean politics are perhaps more civilized than what we see on a day-to-day basis in North America, at least in recent years. So taxes may increase. We do not expect irrational changes to the taxation system. And at the end of the day, a nonsensical constitution would most likely be rejected by the Chilean people. So yeah, there is flux, but I think it's all within a measure of managed risk, and it's not a significant pointer of uncertainty in respect of Chile.
Yep, absolutely. And important investors are sort of cognizant of that rather than sort of grabbing at headlines or sensationalism, perhaps.
Absolutely.
Okay, excellent. Well, let's talk about the rest of this year then. The progress has been great so far. As you mentioned, your first quarter results are are wonderful, and you're doing good things for shareholders who must be happy. But what should investors expect out of Amerigo for the remainder of this year, and what catalysts are on the horizon to continue enhancing the business?
Absolutely. Well, for 2022, the remaining months of the year, the message is very simple. We will continue to be 100% focused on meeting our operational targets. We are bullish on copper. And when these two elements come together, they bode very well for the strengthening of our return of capital to shareholders through our regular dividends, an additional top-up dividend, and share buybacks. I think that's the wrap-up message.
Yep, certainly. Well, excellent. Very good news indeed. And we look forward to hearing a little bit more on Assay TV later in the year as things progress, both geopolitically, but also more importantly with your projects. So thanks for speaking with Assay TV.
Absolutely. Thank you so much for having us here again.
Thank you.